Available inventory of unsold homes grew by 17,000 this week. That's the biggest single week of inventory gains in nearly 3 years. The supply of homes on the market continues to grow. 3 years ago was when mortgage rates were spiking as we exited the pandemic economy. Inventory climbs when interest rates climb, of course. So this spring, mortgage rates have stayed higher for longer than expected, and inventory of unsold homes on the market continues to expand. Mortgage rates are down for the week, so that's encouraging, even though they're still elevated from a month ago. And mortgage rates are lower than last year at this time. So the typical mortgage payment is actually 3% cheaper than it was a year ago if you were buying then. So that's why, probably why home sales continue to outpace last year by a little bit. The Altos HousingWire weekly pending home sales count is coming in each week above last year and has not yet notably turned lower in the wake of market chaos from the tariffs. April home sales will come in with a little growth over 2024. How quickly can the momentum change? Well, it's going to be a little tricky in the next couple of weeks to track how real estate is faring in the face of general market chaos. This coming week's data, next Monday's report, will include the Easter weekend. So both the new listings and new pendings will tend to dip. Last year, Easter was at the end of March. So our comparison to last year will be a little out of whack with the holiday. But then suddenly we'll be rolling into May, and May is when we normally see seasonal peaks in home sales and prices. Given the crazy volatility in global financial markets now, a lot can happen in that time, those 2 weeks. So, what happens to mortgage rates over the next couple of weeks? What happens in financial markets? So, today, Monday, April 21, both mortgage markets and stock markets are moving actually in the wrong direction. Mortgage markets up and stock markets down. Okay, so everything will be a bit hazy with next week's report since it'll include the Easter weekend data. And there's always fewer new listings and new pendings during the holiday week. So don't worry too much about that. We'll be looking at the magnitude of those changes to see if we can see if consumer sentiment is changing. And of course, the most interesting thing about this housing market is how the northern markets and the Sun Belt markets have been on very different trajectories. And this week, April 24th, Thursday, is our monthly webinar where we get to take an hour to dive into all the real estate data details in a lot of the local markets. There's a big disparity in this country still. So we're going to examine whether what is changing and what is not changing. So that's this Thursday at April 24th at 10 a.m. Pacific. These are limited to 1,000 attendees. We always get more than that who want to join. So you can still reserve your spot. There's a link in the description below to register for that webinar. Okay, let's dive into this week's data. Let's start with the weekly pending home sales data. We counted 72,000 weekly pending home sales for single family homes this week. That's unchanged for the week and is just a smidge higher than last year at this time. As I've mentioned, over the last month and a half or so, home sales have been coming in above last year. In 2024, mortgage rates were at their peak in Q2, and home sales dragged way lower than normal in those months. So the base case for April, May, June this year is that we should continue to see home sales gains versus 2024. There is more supply now, and it's slightly cheaper to buy, so more sales are happening. That's the base case assumption. But this year's potential home buyers have a ton of other chaos to factor into their decisions. So, are they starting to worry about their jobs? Is their income falling? Are their expenses climbing? These are bearish factors that are only just slightly impacting housing decisions so far. So, it's only been a couple of weeks since the worst of the tariff plans were announced. The negative effects are not in housing yet. And to be clear, we don't know how hard these negative economic effects will hit housing. Unemployment is still low. American homeowners are in a very strong financial position. Corporations started the year also in a very strong financial position. So it could be that recession hits and housing is the most resilient factor. So we don't know yet. So in this chart, we have the weekly pending home sales. The purple line has been above last year's blue line for several weeks. Next week's report will include the Easter weekend, so we'll break our growth streak. But in May, you can see how restricted home sales were last year, and I anticipate that absent some new crazy market shocks, we should see the May data resume home sales growth over last year. I mentioned that local markets are behaving very differently. So, in the weekly pending home sales, Florida stands out as very weak. There are 10% fewer sales happening in each week in Florida now than last year, same week last year. So, on average around the country, home sales are up, but Florida is 10% fewer. And condos, which Florida has a ton, are even in worse shape than single family homes. So, we're going to look at Florida and some of the other local market variables in the webinar Thursday. We'll dive in deep there. In total, there are 391,000 single family homes in contract. That's 3.5% growth for the week, and it's a decent clip of home sales happening. These are all the homes that are in the contract pending stage now. So these are sales transactions that will complete in April and mostly in May. And there are almost 2% more homes in contract than a year ago. So the April sales numbers, when we hear the headlines next month, will be ahead of 2024. Okay, so sales are staying elevated, slightly elevated over so far this spring. Meanwhile, the supply of unsold homes continues to grow. So one reason sales are up is simply because there is more selection of homes to buy. I had a friend this weekend realize that a home in his dream neighborhood finally went on sale. He found himself competing with three other buyers, and he wasn't actually previously actively in the market, but suddenly there are homes available where they haven't been in many years in some parts of the country. And prices in this market, anyway, are a little bit lower. So some buyers are actually motivated. As a result, greater supply enables greater sales to an extent. There are now just over 719,000 single family homes unsold on the market. There are another 220,000 condos. Unsold inventory climbed 2.4% for the week. That's a fast clip, but not crazy. As I mentioned, the 17,000 unit gain in unsold homes on the market is the biggest week in 3 years. Unsold inventory is now 32.5% greater than a year ago. That actually dipped for the week. In this inventory chart, I have each line is a year. Inventory always climbs in April, of course, except for the 2020 pandemic year, which you can see here. And we're about to cross over that and have more homes unsold on the market than in any April since 2018. 7 years. So I've highlighted 2018 here in green. 2018 was a rising interest rate year and a rising inventory year. It was also the first year, the first Trump tariffs slowed the economy. So in April 2018, there were 830,000 single family homes unsold on the market. Now there are 719,000. So we still have a little ways to go before we reach the old normal levels. But our inventory forecast now says that we'll end the year with more homes on the market than 2019. So we'll review this forecast this Thursday in the webinar. So join that. That supply, like I said, means more sales are possible, but also home prices don't have any upward pressure. And I think we're seeing both of those results now in the market. So housing supply has two components. The first is the unsold inventory on the market. The second is the rate of new listings each week. So inventory is like the reservoir. How full is the reservoir? New listings measured how hard is it raining? And with 3 years of rising mortgage rates, the reservoir of inventory has been filling back up to the old normal levels. Like I said, by the end of the year, we should be there. But it hasn't been raining hard for many years. The rate of new listings has been very low. So in 2025, we're finally emerging from the drought. We're getting close to the old normal levels of new listings each week. This week saw 77,000 new listings for unsold for single family homes. That's up 1% for the week. There were another 15,000 new listings, immediate sales. So the unsold listings are 12% more than a year ago. And in total, it comes to 4% more sellers now than the same week in 2024. There are more sellers each week. There are fewer bidding wars, so those new listings are adding more quickly to the active inventory. They're filling the reservoir faster. So in this chart, we have the unsold new listings each week. The purple line here is up in the top set of gray lines. It shows that we are finally, after many years, have sellers at a pace that's closer to normal. As I mentioned, next week's report will include the Easter holiday data, so we'll see a dip in the new listings when we do this on video on Monday next week. Then, as we roll into May, the number we're looking for is 80,000. Do we get to 80,000 single-family new listings in a week in May? My colleague Logan Motashami notes that that's a significant threshold, and I agree. It's a good way to look at the new listings data. Think about it this way. If a decent year is 5 million home sales, that means there have to be 100,000 sellers a week, condos and single family. So that's about 80 to 100,000 single family sellers in a week in the peak season. That's where it's like the peak season is where we are now. So we can't get to 5 million home sales if we're still at 70,000 new listings in a week. 2 weeks from now, look for 80,000 new listings on the single family homes. And we're going to consider that a healthy change in the housing market. As supply grows, one of the results is that there is less upward pressure on home prices. There are 32% more homes on the market now and only 2% more sales happening. So home buyers obviously have greater selection, and sellers have to take that into account when they price their homes for sale. As a result, the median price of this week's pending home sales came in at $399,000. That's unchanged for the week and is just a tiny fraction above last year at this time. It seems unlikely to me that home sales will climb over $400,000 this spring. And the real question is whether in the fall, what has happened to demand? Last year, we had our lows of the year with mortgage rates falling, and purchase prices got a surprising boost in September. So this year's purple line in this chart is just above last year's blue line right now. But at the right end of the chart, you can see the blue line from 2024 elevated late in the year. And so this year's pattern will be a function of mortgage rates, of course, like last year, but also of the macroeconomic situation. And that is very early playing out now. So we don't have clear visibility on whether mortgage rates or things like unemployment are going to drive pricing later in the year. Now, continuing on the price pattern of recent weeks, the percent of homes on the market with price cuts ticked up 40 basis points this week to 35.6. Price reductions have not really been accelerating for the past month. The number of new listings who have to cut their price from the original list price is elevated, but it's not moving quickly. So in this chart of the price reductions, you can see this year's purple line ticked up a bit for the week, but it's been on a little plateau for a while. And I think what we're seeing here is that because enough homes are moving into contract, that sellers haven't felt super compelled to cut prices in most of the country. But if you look at the blue line from 2024 at this time, so this time last year was when the economy was reporting hotter than expected and interest rates spiked. Mortgage rates hit 7.1% in late April last year. And you can see in this data here how buyers backed off. So sellers don't get their offers, and so then they have to cut price to stimulate demand. So in 2024, the blue line here, price reductions started moving higher quickly in late April. You can see that inflection point right here. And last year, sellers didn't get a breather until September when rates had fallen back down closer to 6%. So contrast that to the green line from 2022. So I've got the green line here highlighted. At the right end of the chart, when in September, rates had jumped to 7.5%. And you can see how price cuts responded immediately at that time. So the takeaway from price reductions data is that as of right now, price conditions are not worsening. In much of the country, conditions are soft, demand is light, supply is increasing, but these conditions are not deteriorating on average around the country. Okay, that's all the data we have time for today. We'll see you Thursday on the webinar. There's a link in the description below to reserve your spot for the webinar. Click that to join us. You can now get a free Altos account, free report, Altos account. Go to altosresearch.com, run a free report, and let's get started today. Talk to you soon.